What's going on, everybody? This is the blockchain backer bringing you the latest cryptocurrency news and analysis. Today, we're going to be talking about the Bitcoin price chart, which throughout the weekend stayed hovering down here between 20,800 and 21,800. Still providing no direction throughout the whole weekend after the liquidation of the longs happened last Friday. We've spent some time on this channel trying to dissect what type of structure is happening here in Bitcoin after we've had all these liquidations one after one with all the contagion that happened in the cryptocurrency market. What kind of structure could this be happening here after so much downward pressure? Looking back to previous bear markets for Bitcoin, one of the big arguments is the bear market has to continue on and we have to go lower because we've done that in previous bear markets before. However, as we know in both of the previous bear markets, after we got down to these price levels, the price action did bounce up much higher first before crumbling over. Then at the same time, as we know, if we go back to April 14th, we could see that the price action of Bitcoin has been very similar to that of what a completed bear market already looks like. However, the structure that we're playing out in here, it's unlike the bottoms that we've had in previous bears before. For the last several weeks, we've been looking through history, looking at different charts to kind of say, what happens in this type of structure right here if this is a local bottom in here and the price is going to start working back up for Bitcoin. What could happen in here, right? And so for the last week and a half, talking about, hey, a long liquidation would seem appropriate, followed by a short liquidation back to the upside in the other direction. So far, we've had the long liquidation play out, and we've still held $20,700. Now, in each example where I've seen this happen before, we do not set lower lows. It will be continuous higher lows coming out of here, which we still have currently right now for Bitcoin. So if you were to take this low out in here, you don't have anything that looks like any type of structure that we've had in the past that I can locate to reference back to. But in these circumstances, what happens is that prices work up, down, and then finally they work their way back up into this level. The unfortunate news about what this structure does mean is it does mean that the bear for Bitcoin is not over, and we're just merely getting started on this multi-year bear for Bitcoin at this point. So nothing about the structure that's happening right in here for Bitcoin mimics that of something that is what happens to start a bull run, except for maybe if you look back to like Binance Coin back in 2018 and 19, it kind of did there. So we'll have to see kind of what happens in price action up in here. But a lot of times this structure right here, it really just gives you a reversal back up for Bitcoin somewhere around $40,000 after then reversing right back down violently. So until a lower low gets in place and invalidates this, this is the structure that I'm looking to right now. And all the worry of the market will come in if we can work our way back up to about $40,000 for Bitcoin. The good news is throughout the weekend, it definitely did hold that lower low. We did not cross below $20,700. It did hold it all weekend long, which, as I had shown in my video last week, that's kind of what I was expecting to happen in here. But we're kind of getting to a point now where it's like, all right, enough time has elapsed. It's time for this thing to either short squeeze back up or give us a clearer picture. Each time we've had these pull downs happen in here, we can kind of see how much time we've spent down in here before the prices did eventually work their way back up. So you can kind of get a visual representation. After much time here, it went back up. We can look over here, see this one getting to the point at which it would have already started reversing. You could check out that one, would have already started reversing. Check out that one, would have started reversing. So we've been down here just from the structure of how it's been behaving so far. Enough time has been spent down here for it to go ahead and make a decision. So hopefully by tomorrow's video, we've gotten a break from the range. Now, just based on the information of what I see on the chart and what I've seen throughout history, this still seems to be the structure of what happens. These things will work their way up, whatever the structure will look like in here before it finally reaches up in here, and then that's the reversal point, and then it pulls back down. But let's entertain the idea of what if it's not, right? What if this level down here does get taken out and Bitcoin does go down below 20,700? Well, in no circumstances of this type of structure that reverses back into here have I seen it where a new lower low gets put in there. So if a new lower low comes in here, does this automatically mean we've bought ourselves a ticket to new lows? Well, anything is possible in markets, but there's a lot of problems that come along with the idea that if that low gets taken out, that we're going to go set new lows. Does it mean that we've then decided that we're actually going into a longer term Wyckoff accumulation that's going to happen in here, and we're just going to be stuck in these prices for several more months? That still is absolutely possible. I see a lot of people saying that we are actually just going to head down and get into the 16s to the 15s, and that's it. That's the end of the bear market for Bitcoin, and we're able to shuffle our way back up from there. But I've presented a lot of problems that come with that thesis that if we go lower than where we're at, and technically the price of Bitcoin could dip down just a hair lower because it's actually the market cap that matters, and the market cap will still allow for a revisit back to the lows again. Even if the market cap does set and touch the low once again, we actually would see Bitcoin dip down just like a hairline below its previous low. So that still technically is allowed in here in order for the market cap to be able to maintain its previous all-time high, along with a Fibonacci retracement level happening in here. So I see a lot of people hoping to be able to buy the dip of one more push down just a little bit lower, but there are serious support levels that are actually happening right here with Bitcoin's market cap of where it's at currently right now. That just breaking through here, right here, in my opinion of how I assess charts, would say to me, dang, that is like a way bigger problem than just saying, hey, great, we're now in the 14s, 15s, 16s, it's time to buy. For me, I'll be sitting there saying, whoa, man, there was a lot of breaking that happened. So there's a couple of ways of how you can actually look at this, and the way, or at least here's a couple of ways the way I think about it, right? I think to myself, if we are going to work our way back up in here, right? If this level is going to hold right in here and we're going to work our way back up, that probably screams to me in the way that I'm going to be communicating on my YouTube channel is that I'm real worried about this price level. Like, hey man, the whole setup that happened in here, this wonky sideways shuffling that we did this whole time, there was nothing really bullish about this structure, and the way this thing ended up playing out was just like that of those that go up here and then they just completely turn over on themselves right away. So that's the big concern with the thing that we have happening right here right now. For a more long-term bullish structure, you would kind of hope that you would see a Wyckoff accumulation happening in here, and that this structure does change and it does start looking more like Wyckoff accumulation, because then we have more of a case to build to say, hey, this is Wyckoff accumulation down here on the bottom, and the last time that this happened, it led to a big, massive run. So not necessarily a bad thing to see that Wyckoff accumulation from a long-term perspective. So kind of depends on what you want, right? This structure, if it reverses back up here, each time these things happen, it reverses down, and doesn't just reverse down, like it means that there's just years ahead of this stuff happening in here. So that's not necessarily good long term, but I'm sure there's a lot of people who are just like, get me off this train ride. I want to get off right now. So they'll take it. But if we got something more like this, that is healthier long term. So if 20,700 does break in right here, does it automatically say we're going into Wyckoff accumulation? No, not from what I can see. It doesn't automatically say it. It still opens up the door to say this is now invalidated as being something that shuffles its way up based on past structures. Doesn't mean it can't do it, but it's just not mirroring the type of structures that end up doing that due to it setting a lower low. It just means we're not doing that anymore. Now it opens up the door of, is this Wyckoff accumulation, or is Bitcoin so ridiculously bearish that it is going to break through those lows? It is going to take this out. And something's fundamentally wrong with Bitcoin, which one could argue that there is, because why? I, of course, have taken a lot of criticism because Bitcoin hasn't retraced, right? It is ridiculously common for assets to retrace, but Bitcoin just hasn't done it. Even the Dow Jones Industrial Average has retraced 61.8%, a typical Fibonacci retracement. When the world was screaming gloom and doom, it reversed and has retraced so far. Bitcoin just hasn't done it. Even right now, the Dow Jones has retraced all the way up here to April 22nd prices right up in here, which Bitcoin is still sitting at the low. So is there something fundamentally wrong with Bitcoin, right? That's the big question. And if $20,700 does break for Bitcoin, that's when we have to start really kind of discussing that and saying, well, what is happening in here? Do we start seeing things start to calm down for Bitcoin and Wyckoff accumulations start to show itself, or does it really start heading straight back down to these lows once again? Again, my base case for what I think is happening for Bitcoin is just the fact that, well, as long as it's holding that low, it is creating that same structure that eventually just gets its way back up in here and then pulls itself right back down. That's the structure we're making right now. That is also equivalent of catching up to the stock market. Also, when I was kind of envisioning how this would play out, we talked about it for a week before it ended up happening, that it seemed likely that we would see a long squeeze happen in there and a liquidation of the longs. It's exactly what we got. It was like over $600 million of long liquidations that happened right in here. And what's typical is the next thing to come is to happen to the shorts to the opposite direction. So considering we actually got the long liquidation, which was the exact language we used, right? We weren't saying, hey, prices would just meander down here. It seemed likely that we would go liquidate longs and take care of leverage in the system, which we did. The fact that that happened and the fact that even throughout the weekend after that big liquidation happened, it did maintain that low right in there. This is still my base case of what's happening for Bitcoin right now, this is still the structure setting up. It's only if we go below 20,700 becomes the question of, are we Wyckoff accumulating or are we heading down even lower? And Bitcoin's more bearish than even the stock market is. And I know when we do these kind of videos, it's kind of like, okay, like literally, what are the three things that we just talked about? These are the things that drive me crazy whenever I watch YouTube videos. We're talking about up, we're talking about sideways, we're talking about down. That's all three directions. Good job, blockchain backer. But what we're talking about is the structure that's actually happening in here. So long as Bitcoin is maintaining that $20,700, the structure that it is making is that of one which goes up and does come up here before reversing its way back down. So long as that 20,700 is holding. If the 20,700 does end up breaking and this whole short squeeze idea does not end up playing out, we then set ourselves up for sideways or down, and the structure no longer mirrors that of one, which ends up doing that. It then becomes more favorable for sideways, Wyckoff accumulation, or down. But does it automatically favor the one that goes down? The problem with going straight down is what we're talking about here, is that you would take out very serious support levels that are happening in here. So does it favor the idea of it actually going down and breaking into new lows? Well, I think if you look at a bunch of retail investors and what they're wanting one more dip to just go ahead and buy that new low of what happens. But we can see if there's one more dip lower, it causes massive catastrophic damage to the actual chart. So if we do set that new low, due to the 786 Fibonacci retracement and due to the previous all-time high still holding as support, I will consider it more favorable that we're going into longer-term Wyckoff accumulation without breaking into new lows. But if we do break into the new lows happening in here, I think those that think that's the dip to buy are not paying attention to the catastrophic damage that would happen on the chart. So do you think catastrophic damage is going to happen to the chart, or do you not think? If you don't think it's going to happen, then Wyckoff accumulation is a more favorable one. But that's for each person to guess for themselves. My guess, which I'm not loving, is that Bitcoin is behaving like that of one that eventually works its way back up in here and then reverses on itself. That's what I see happening here on the chart, and that's what this structure favors right now. For the long-term, multi-year benefit of my portfolio, it would benefit a whole lot more from Wyckoff accumulation and us getting this thing going in a more healthier manner. I would prefer that. But with the way it's behaving and the fact that it did do the leverage squeeze in here and then maintained that low, this is still the structure that I favor. It's still playing out the way that I've kind of anticipated that it would be. And as long as we're holding that 20,700, that's the one it seems to be favoring at this moment. So we've been down here now for, I think we're working on day 3, right? We got down here on Friday, Saturday, Sunday. Today's Monday. We're working our way down here, waiting for an answer to come out of here. You know, if a short squeeze comes, right? So it's one of those things where you're not just kind of sitting here hoping for it to kind of just start waddling its way out of here. With a short squeeze, it does something similar to like what it did on the way down, where it just works its way up out of nowhere, out of surprise, automatic buying, and we're still just kind of sitting on the sidelines waiting for something like that to happen. So I figured in this video, as we're sitting down here waiting for that to arrive, we talk about the other things as well of what happens if it does take out 20,700. And based on how I've seen these things play out before, if we do take out 20,700, it really starts reducing the chances of this being what we're doing. But it kind of depends on what people's time preferences are on if they want that or not. So currently we have the structure for this. any dip below 20,700 starts changing things. So we're just kind of sitting back waiting, as we've been right down here for 3 days at this point. It is still following what they look like, where just a short squeeze shows up and it just pops straight back up. It's still my base case for what's happening right in here, but we're still just waiting for the market to tell us the answer. So we'll see. I figured we'd start this week off talking about Bitcoin because it is the dictator of the market. We have a lot to talk about this week. There's a lot going on in traditional markets, and of course talking about the altcoin market as well. But I wanted to really make this one focused on Bitcoin because this is kind of the one that tells us the story of the rest of the market. So kind of waiting on two different things to happen there for Bitcoin, either a short squeeze to shoot it right back up or for it to go ahead and dip below that 20,700. My best guess, and it's just a guess, is that we're not going to see something where it just kind of crawls its way back up. If it's going to go up, it's likely going to fire right back up, just like how it fired right back down. The bears have done their victory lap. The shorts have doubled down on themselves. My best guess is we're going to take them out next. But the way those things work is they just show up as a surprise. They just pop up out of nowhere. So we're waiting on that to happen. We were quiet throughout the weekend after the big sell-off on Friday. Now we're just waiting for some action to arrive. And we'll come back to talking about Bitcoin later this week if we end up getting that move to happen. Otherwise, it's going to be time to focus more on altcoin market and traditional markets. But all right, guys, that's going to be it for this one. Thank you so much for watching. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you can be notified of when I create new content and when I go live. As always, this is not investment advice, and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.